I think Powell kind of felt that the Fed had committed itself to a hike and they were going to hike. They did the smallest possible hike, 0.25%. Now we're up to 5%, I guess. The Fed funds 4 3/4, 5% is the new range. And this is probably the end of the cycle, because what Powell did acknowledge, particularly in a Q&A, where he went out of his way to make the point that they have relaxed their forward guidance. In fact, and I'm kind of jumping ahead of myself a little bit, but during the Q&A, one of the reporters asked Powell if they had considered a pause. And Powell answered, yes, we did consider it, but we decided to reject that consideration and hike anyway. But he said we wanted to telegraph our, concern, or whatever word he used, through our forward guidance by tweaking the language such that the next rate hike is not as sure, that it kind of reflects all the uncertainty out there. So what Powell did this time is he opened the door to no more rate hikes. And so now that he's opened that door, I think the markets are going to rush in and assume that there are no more hikes. But I think what was a big problem for the market, which ended up down, the Dow was down on the low of the day. It closed down over 500 points, at 530 points. That's a 1.63% decline. NASDAQ held up a little bit better, down 1.34%. The Russell 2000, though, the weakest of the index, is down 2.83%. And, look at the Cathie Wood ARK Innovation, down 4.8%. Even Bitcoin rolled over. Intraday, while the Fed, while Powell was speaking, Bitcoin almost got to 29,000. I think it came within spitting distance, of that milestone, and then rolled over and crashed below 27,000. It got down to 26,700, around there. As I'm recording the podcast, Bitcoin has retaken the 27 handle. It's about 27,300. But all the risk assets sold off late in the day. A lot of the crypto-related stocks got clobbered at the end of the day. And I think a catalyst for that late-day sell-off. And, at one point, I think during the Q&A, the Dow might have been up 300 points. It made a new high while Powell was talking. But I think what he said at the end of the podcast, I think what Powell said at the end of his press conference was a catalyst for the sell-off. I mean, maybe it would have happened anyway. But what I think he said that was so problematic is that he was asked a question about rate cuts. Are you thinking about cutting rates? Because the market is already pricing in cuts. If you look at the yield curve, the market is pricing in that not only has the Fed ended its tightening cycle, but that the next easing cycle is imminent. In fact, I think it's already begun because of the premature return to quantitative easing, which I think renders this quarter-point rate hike meaningless, because I think the quantitative easing is a bigger ease than the rate hike is a tighten. So we have had an ease. But I think that when Powell said that a rate cut is not in their baseline forecast, that was the last thing he said, and then he kind of walked away, took no more questions. So he left everybody with those final words: there is no rate cut in our scenario. And I think that caused problems for the market, because the markets are pricing in a rate cut. They are betting on rate cuts to bail everybody out. And so Powell kind of pulled the rug out from under those hopes. And so everything came falling apart. But I think personally that what the Fed did today was just another example of the complete lack of understanding that Powell has for the predicament that the United States is in, the U.S. economy and the Fed. In fact, he was very dismissive, I think, of the whole, current banking crisis, financial crisis. He really didn't even mention it in his opening remarks. He didn't mention it in his opening remarks. He talked about it in response to questions, but it wasn't something that he really talked about, which in my mind means that he doesn't think it's very significant. He kind of referred to it as a bump in the road. He acknowledged that the road to 2% inflation was going to have some bumps, basically saying that what we're going through right now with all these bank failures, these are just some of the bumps that the Fed expected along the way. He never said it was going to be a smooth ride, that the road to 2% inflation is going to have a few bumps, and we just hit a pothole. That's basically all Powell thinks happened. It's far more significant than that, especially given the gravity of the response that we've already had by the U.S. government and the Federal Reserve in particular. This is anything but a bump in the road. As far as I'm concerned, it's the end of the road, and we're never going to make it to 2% inflation. The road just wasn't long enough to get there, and now inflation is going to really start to pick up. In fact, just to sidetrack for a minute, just to give you an idea of what's going on, look at the UK inflation numbers. They came out this morning, so this was before we got any of this news from the Fed. And the expectation, I think, was for the inflation rate in the UK to decline. They were looking for a 0.5% increase in the month of February. Well, that wouldn't have been a decline, because the prior month there was a drop. There was 0.6. They were looking for a decline in the year-over-year rate. So they were looking for inflation to pick back up. But instead of getting up 0.5 in February, the number came out at up 1.1. So inflation was twice as bad, measured by the CPI, as they were expecting. And they had expected the 10.1% year-over-year UK inflation, right, to drop to 9.9. I mean, still a pretty big number, but it wasn't going to have a 10 handle on it. It was going to have a 9. But instead of dropping to 9.9, it rose to 10.4. So inflation in the UK is no longer getting better. It is getting worse when you've got 1.1% surge in 1 month, and you got this year-over-year rate of 10.4. Where are interest rates in the UK? 4%. That's where the Bank of England has interest rates. 4% interest rates, 10.4% inflation. Do you think that 4% rate is going to do anything about 10.4% inflation? No. In fact, it will do something. It will contribute to making it worse. Because how do you respond to 10.4% inflation when interest rates are only 4%? Well, you go out and borrow money and spend it, because your debt is being wiped out through inflation. You are being encouraged to borrow and spend by the Bank of England. So they are encouraging behavior that will exacerbate the inflation problem that they are pretending to try to solve. Of course, they can't actually solve it, because then they'll have an even bigger political problem on their hands right away as everything comes collapsing down, just like, the pension system did. Everything would come collapsing down. A lot of people are trying to say, well, Silicon Valley Bank, they're just a bunch of idiots. This is just a isolated example where you had a bunch of really dumb people doing these really dumb things. This is not an isolated situation, and the stupidity, right, was at the Federal Reserve. In fact, it's also at Congress. It's laughable that you see congressmen or congresswomen pointing to these execs at Silicon Valley Bank and saying, how could you guys have been so dumb? How could you have loaded up on long-term treasuries and mortgages knowing that interest rates were going to go up? I mean, what kind of idiots are you to do that, right? Well, first of all, they didn't know they were going to go up this much. I mean, most people were delusional about how high rates were going to go. They were completely underestimating how bad the inflation problem was and how high rates were going to rise in the pretend fight against inflation.